Hello traders, welcome back to my channel. Today I'll be explaining an NQ long setup from the 1st of July that happened on the Asia session. To be clear, I didn't take this setup because it wasn't in my usual trading hours, but I will be explaining it because the setup matched all the boxes that for me usually I take this kind of setups, but I will be explaining it for people that normally for them they trade the Asia session. So without further ado, let's start. So first of all, we decide the bias for the day, and for doing that we go on the 4-hour time frame. As you can see, the bias for the day is bullish. As you can see here, we have this bullish movement which have created a break of structure to the upside, so that tells me that the bias is bullish. And from that bullish movement I shall mark key liquidity points from the 4-hour and the 1-hour time frame. So as you can see here, I have already marked the 1-hour key liquidity point that I'm interested in. As you can see as well, on the 4-hour time frame, this liquidity point wasn't much clear. So on the 4-hour time frame there was nothing to mark. I shall now go down to the 1-hour time frame and show you how clear it was, that liquidity point that I have marked. So as you can see here, we can see this small consolidation here in which it was really catchy for me. So on the 1-hour time frame you can see that this was a key liquidity point to mark. I marked it from the lowest point all the way with the line to the right hand side, and as you can see here, price went below it. So after that, just to do a quick recap of what have happened on the 17th, price went below that liquidity point, made a bullish move, a retracement, and another bullish movement. So from this lowest point here, I have marked a 1-hour key liquidity point that was sketchy for me. Why? Because price here made a break of structure to the upside, so that is showing me that price wants to go, the intent is bullish. So here we can name it 1 hour. Also, before I keep on with the explanation, if you go to the 4-hour time frame, you can see that there was a bearish candle. So a bearish candle on the 4-hour time frame, it's a really strong candle. So that's another reason of why I plotted that key liquidity point. Back again to the 1 hour, and I shall rename this line to 4-hour, 1 hour. So I will be discussing this point here, where price during the Asia session took the liquidity and made this bullish move. So as you can see here, price made this bullish movement and retraced. After the retracement, we drop down to the 1-minute time frame, and we'll see how price folded. So let's drop down to the 1-minute time frame, and here we are. It was a very clean move, very simple clean move for those people that trade the Asia session. It was really good. As you can see here, price made this bearish move. Then it started to consolidate and made this bullish move. So that bullish move, like usually, it ticks one of our boxes. So I will name it inner break of structure. So this bullish movement here is what we want to see. After this bullish move, price started to retrace down. From there, we plot a fib from the bottom of the bullish movement starting point up till the highest point, and we get the fib like this. Now, after plotting the fib, we mark areas below the 61.8 of the fib, bearish candles only, and the only candles that are bearish below the 61.8 is this one here. So after we plot the only point where I want price to go below or else make the same low, we can delete the fib as we don't need it anymore. And here we are. So here we have the low, which is practically the same. It still counts. I take it. It still counts. So after price does this equal low here, you can notice that this candle is left with a IFVG. It created an IFVG. And as that IFVG gets filled, the entry long setup could have been taken. Like this, we plot the long setup from the bullish candle that filled the IFVG and went above. The stop loss, like usual, we make it at the lowest point of the bullish movement, and the take profit one can do it as he wants. Usually I would have gone for the 2.5R, which would be up here, 2.53, but price kept going higher and it didn't stop. Even in the London session of this morning it kept going higher, and one, if could have hold it till the very top, could have gained nice RR, would have gone to 12 RR, but let's be more down to earth. If it was me, I would have closed the trade at around this point here, 7R, even less, but at that point it was a good time for it to close, because it might reverse, of course, but that was a good point to close at. There was another point to close, a good point to close at was this point here, this point here, the one that I showed, and this point here as well. Those are good points that one could have taken the take profit at. So for today's video, that's all. Just a quick recap. First of all, we decide the bias for the day, and then we drop down to the 4-hour and 1-hour to mark key liquidity points, and after that our job is to just wait only for price to go below that liquidity. Once it goes below that liquidity, we'll drop down on the 1-minute time frame and wait for our strategy criteria to start ticking our boxes. Like this setup here, it made the bullish movement, retraced below the 61.8 and even below or equal to the bearish candle of the bullish movement, and after that filling up the IFVG. Once the IFVG is filled, the long setup could have been taken. So it really was an easy setup, a clean setup for those people who trade the Asia session. Unfortunately, I don't trade it, or else I would have caught it, but I can't be up 24 hours a day. But it was a really good setup. So thank you for watching. If you learned and liked the video, please feel free to comment and subscribe. I'll see you on the next one.